Picture 2 ETFs both laser-focused on the same stock, advanced micro devices, both promising eye-popping weekly payouts, yet one has quietly doubled its net asset value, while the other has seen its price cut nearly in half. Today we're opening the hood on AMDW, from Roundhill and AMDY, from YieldMax to see exactly how each one actually manufactures that income and what it costs you in the process. Let's start with what each fund is actually doing under the hood. AMDW, the Roundhill AMD Weekly Pay ETF, is an actively managed fund that gives investors 1.2 times leveraged exposure to AMD's weekly price moves. It does this primarily through large notional swaps on advanced micro devices. One swap position alone is 77% of the fund, while also holding actual AMD shares at about 21% and another AMD-linked swap at 21%, all backed by Treasury bills for collateral. The leverage amplifies both the upside and downside of AMD's stock price, and the weekly distributions come from that amplified exposure plus whatever income the structure generates. In plain terms, it's like using derivatives to take a bigger bet on AMD's moves than your cash would normally allow. AMDY, the YieldMax AMD Option Income Strategy ETF, takes a completely different route. It runs a synthetic covered call strategy on AMD. Instead of owning the stock outright in size, it holds mostly Treasury bills, 73% plus cash and a government money market fund for collateral, then writes call options against a synthetic long position in AMD. Those two call options the fund sells generate premium income that funds the massive weekly payouts. The trade-off is built in. When AMD stays flat or drops a little, the premiums can look fantastic, but if AMD surges, the calls get exercised and the upside gets capped. One fund is using leverage and swaps to magnify AMD's price action. The other is selling insurance against big AMD rallies in exchange for steady premium. Before we go any further, this is not financial, investment, tax, or legal advice. It is not a recommendation to buy, sell, or hold either fund. ETFs can and do lose value, sometimes substantially. Always read the current prospectus and other fund documents yourself, and consult a qualified professional before making any decisions. Both funds pay weekly, and both carry a 1% expense ratio, but the headline yields tell two very different stories. AMDW comes in at 42% while AMDY prints 66%. That gap exists because AMDY's entire engine is built around harvesting option premium from those call rights. The more volatility in AMD, the richer the premiums it can collect to hand out. AMDW's 42% is coming from its leveraged AMD exposure itself, so the payout moves with the amplified price action rather than relying on a separate options overlay. The recent 4-week average distribution on AMDW has actually climbed to $1.52 a share from 94 cents earlier, while AMDY's latest 4-week average has dropped sharply to 85 cents from $5.81 at the start. Higher yield on paper does not automatically mean more reliable cash in your account over time. Now look at the net asset value paths since each fund launched. AMDW started with a reference price of $53.20 back in July 2025 and has climbed to a latest NAV of $99.04, an 86% gain in net asset value. AMDY launched at $98.90 in September 2023 and has fallen to $53.09, a 46% decline in NAV. The difference is mechanical. AMDW's leverage structure lets it ride AMD's price moves higher with 1.2 times the force, so when the underlying rallies, the NAV participates aggressively. AMDY's covered call approach deliberately sells away some of that upside in exchange for premium, and repeated call writing plus any periods of strong AMD moves have steadily chipped away at the share price even as distributions flowed out. When you add the cash distributions back in, the picture shifts again. AMDW shows a simple distribution-inclusive return of 164% since launch, driven by that 86% NAV gain plus $41.35 in cumulative payouts per share. AMDY's distribution-inclusive return sits at 66%, built almost entirely from its $110.71 in cash distributions per share, offsetting the 46% NAV drop. One fund has delivered strong price appreciation on top of solid payouts. The other has returned most of its performance through distributions, while the underlying share price has eroded. The all-in result depends heavily on whether you value the NAV growth or the cash flow more. On the risk side, AMDW's maximum drawdown reached -48%, while AMDY fell as much as -75% from its peak. The distribution trends reinforce the contrast. AMDW's payouts have been rising in the most recent period, suggesting the leveraged exposure has been generating more income as AMD moves. AMDY's distributions have compressed dramatically, which is common in covered call strategies when the underlying rallies hard and the written calls consume more of the upside or when volatility settles. The leveraged fund has shown sharper but ultimately shallower drawdowns so far, while the option income fund has experienced deeper price declines, even though it started with far more assets under management at $400 million versus AMDW's $89 million. These are two distinct tools built for different investor goals. AMDW uses leverage and swaps to magnify AMD's price path with weekly income attached, while AMDY uses a synthetic covered call structure to prioritize premium collection at the cost of capped gains and greater NAV pressure. One has produced stronger price appreciation alongside its payouts. The other has emphasized higher headline distributions that have varied more over time. Which approach fits depends entirely on your own time horizon, risk tolerance, and what you want the position to do in your portfolio. This remains research and education only. Verify the latest fund filings yourself and speak with a qualified advisor before taking any action. 2 quick things before you go. If this head-to-head helped you cut through the hype, hit the like button and subscribe. It is what keeps these autopsies coming. And tell us in the comments, which of these 2 would you pick and what matchup should we run next? We read everyone. Thanks for watching.